Yeah, yeah. Red wheat, shaking hands on the mouse, chasing candles till they chase you out the house. You want revenge? Market doesn't care, you're mad. Clicking just to feel alive. That's how it takes everything you had. Step back from the screen, breathe slow, ask why you came here. You know you're not here to gamble on a chart. You're here to master your own heart. Wait for the fair buy you got. Don't tap, don't chase, don't snap. Trust in the process, trust in the map. One clean setup, that's the strap. We don't overtrade, we don't overcap. Protect that mind, protect that stack. Journey FX on the screen like a flag. We wait for the fair buy you got. Overlevered, every pip feels like a storm. Wide eyes, no sleep, calling chaos my new norm. But discipline is the edge you never see. Skip 100 trashy trades for that one that sets you free. Small risk, big patience, that's wealth. First rule, guard your mental health. Close that chart when you feel thirsty. The asset mark that first. For the fair value you got, don't tap, don't chase, don't snap. Trust in the process, trust in the stats. Slow grind higher, that's the path. We don't blow accounts, we don't look back. Losses just data, not an attack. Money and slow on the screen like a flag. We wait for the fair value you got. Every drawdown, just a chapter, not your name now. Every meltdown, just a signal, something changed. Lord. So you journal, you a cast. Turn that panic into trust. Turn that rush into a craft. Turn that fear into a laugh. Hey, for the fair value.
All right, what is going on, everybody? We are back taking a look at our morning execution for NQ. And before we start the, video stream, all that good stuff, I think it's important to go in and take a quick look at why we did the setup, why we took this setup, what was indicative for us to take this long, because as you can see, we went long kind of in this area, and then after price kind of then shot down. So as always, when we start, we always got to give thanks to the Lord. We also got to give thanks to Michael Huddleston for providing us with this free content. This channel is how I personally trade ICT concepts, how I've understood them, how I've come to grow in my overall understanding of the market, and how I execute the 2022 model or a continuation model or all the other stuff that's available on the channel. So if you have not checked out Michael Huddleston, aka Inner Circle Trader at youtube.com, definitely go check him out. All my thanks to Michael for showing me this and for God to bring me towards having access to see these things. So going into the market this morning, if we go out on the daily, I had a few things that were relatively, whoa, I guess got to bring you over there, right? This should, boom, there you go. So looking at overall on the daily, there's a few things that kind of I wanted to consider going into today. Yesterday was a huge expansion up after we swept the weekly low. And a lot of people got caught offside yesterday. And this is something that's going to happen to all traders. So if you get caught offside on one trade, don't kind of overthink it. Don't worry about it. But for me, yesterday's move was pretty clear that, okay, we swept lows. We're moving higher. London, this is London, came down, then moved higher, expansion. And what this left behind for today, Thursday's regular profile is typically a reversal day. So we should kind of see retracements happening on Thursday with a slight move up, and then after Friday kind of finish off, which in my view, this whole block here is a market maker buy model. So we want this block of price action to kind of close out the market maker buy model with this high eventually being taken out. Okay, maybe I'll make that a little bit thicker. So that's my overall view of the market, especially after we came on this weekly low, swept it, and then after we've seen large displacement candles upwards, respecting order blocks. But now we're at the 4 hour, and the 4 hour right now going into yesterday's price action, showed a lot of areas where price could retrace into for Thursday. So there was this first 4 hour here, which got retraded after kind of 1, 2, 3, 4, 5 times. And then we saw this 4 hour down here, which I was thinking, okay, if we come down to this 4 hour, we're likely coming into this order block down here. Order block is the retracement leg, these 3 series of candles that would want price to kind of retrace. So I was like, okay, we might come here, then wick into this, and then I'm expecting us to kind of finish this move out over the next couple of days, weeks, whatever. But who knows? Price has a mind of its own. So that was my overall view of the market. Was Thursday reversal, look for shorts for a retracement into the 4 hour. But when we kind of got stuck in the 4 hour at midnight, I was kind of thinking to myself, okay, is this enough? 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 And I kind of saw going in that we kind of did a rejection candle here where we have a large wick and price is showing that willingness to go lower. And this happened at the 3 to 4 a.m. silver bullet time. So for me, I'm looking at this thinking, okay, we wicked up, respected this 1 hour SIBI, respected this 4 hour SIBI, and right here, when we came into it in Asia session, and then after we're starting to kind of move lower body-wise, okay? So I'm thinking, okay, shorts, but do I see the right opportunity for a short? So if we go down on the 15-minute now, this is yesterday's trade. Relative equal highs were swept. Asia highs over here, like I was saying on the higher time frame, that we kind of went up into the 4 hour SIBI. And then we kind of broke down here Asia lows. Asia lows get swept during London, and during London, we see a large displacement move higher. So London sets in the high, does not take out Asia high. So going into price this morning, I'm thinking, oh wow, I didn't even see this 15 on the open. Retrace into 15 sweep. But there's also see like how there's a 50. I'll just show it, but because it'll show kind of in the reasons for. So this is a BISI, and this is a SIBI. So we're kind of in between both, right? And then we have relative equal highs right here. And then we have these relative equal lows that were swept. But anyways, could go lower. How low? I like this 4 hour, but who knows? This might just be a retracement. But I like this 4 hour, and I like this 1 hour. I like this 1 hour order block down, or New York AM here, but I also like this 1 hour order. Did I take it off from yesterday? Yeah, I did. But there's a 1 hour order block. Man, it's going to be, why are you so disorganized? Oh, I don't know what's happening with my camera. Still recording? Cool. Good. There's just 1 hour order block down here. So 4 hours right there. This, if we break this, like, it's like, okay, we going downtown. Anyways, so back to the 15-minute. We can see pretty clearly here that during the New York Open, so here I'm thinking bearish, right? We come here, respect. This is just a wick on the 1 hour. So I'm like, okay, then we rallied lower, accumulation right here. Price is kind of in a range. Then we drop lower. We take out London low. When do we take out London low? At 9:15. So going into the market right now, let's look on the 5-minute chart. I'm thinking, okay, we just swept London lows. My expectation is that we're going to go and take out London highs. So on my executions today, so I'll just show you those. Just so you know, we're all about transparency on this channel. Nothing hitting, nothing holding back. Just the truth, the truth, the truth. Okay. And if you look here, London high just got slapped in right there. Boom. Okay. Anyways, so we open right here at 9:30. We have the first presented fair value gap, a pretty large range, and then we kind of rally higher out of it. Then what do you want to see after in a market maker buy model? You obviously want to see a change in state of delivery, and you expect price to retrace into that. So on multiple levels here, we take out short-term high, short-term swing high, short-term swing high. Like we have a swing high here, we have a swing high here, we have a swing high here. We take all of these out, and then after we retrace. Where should we typically retrace? We should retrace into a previous fair value gap for us to enter. But if you look on here, the only fair value gap that is available is this one right here, the small one right here. And I didn't like this fair value gap only because this first presented fair value gap's right here. So I'm like, I don't know, it's a pretty large displacement upwards. Could we go all the way back down there? So I didn't want to buy in here and then have to withhold all of this. So the next best kind of area to get in, not financial advice, the next best area from my understanding of ICT concepts to get in is when after we break through this area here. So let's just say this one up here, came down, and then after one up here, came back down here. Then we essentially came for our target. Right? This is kind of what happened, a continuation pattern upwards. So the next best way to get in, if you don't trust fair value gaps in the displacement side before the down move, is you then look from the down move, you start to look for fair value gaps on this leg upwards. So if we look for fair value gaps on this leg upwards, we see this one. I'll put it in blue, or I'll put it in yellow. Will be ugly. Yellow's ugly enough. Okay. Let me just bring the candles forward. Okay, so you see this first fair value gap here. And when I see this first fair value gap and we come out here and take out this swing high, I'm like, this is beautiful. So any retracement into this fair value gap would have been the ideal buy. But if you're like me, and sometimes you get nervous, which I'm trying to work through overall, is this order block gets built right here. So I'm trusting this order block out of this fair value gap, the retracement after the swing high, as being kind of the saying, the freaking Gandalf saying, "You shall not pass." So I took a retracement into this and then targeted the London highs with the idea of us possibly going, I believe this is Asia highs. Yeah, it is perfect. I'll just move this over to the right. So you're not like, what's that line over there? With the possibility of taking out Asia high, right? And yes, I know, like I said, Thursday's profile is a reversal day. We do expect Thursday to go lower. But I saw this opportunity and I was like, oh, just take this for a short scalp. So let's now go into the trades and how it kind of worked out. So here we have me opening up my charts with, I'll just mute this. We have me opening up my charts with wealth charts. Like I said before, I trade Apex on wealth charts and I trade Lucid Trading on TradeC. So what you'll kind of see me start to do on, let me just make this faster. I see this right here and I want to buy here, but I don't because I'm still annotating the chart. I'm still looking at, okay, well, what are we doing? What can we do? But this is the move that I just said is these two down candles into this fair value gap on the down move. Uh-oh, I just lost the video and now it's going to be playing. So, maybe I'll just show you what I did right there. So what this is right here, this is me in demo. So here I go in demo. Okay, if you were to take it right in demo, what would happen in demo? Because I have to still gather enough data to be able to have enough confidence to say, okay, I trust this model, I trust that model, I trust this model, I trust that model. And now I'm jumping over to my TradeC account for Lucid Flex. So I see we did the retracement here. I see this order block. I'm debating, okay, where do I want to get in on this trade? I see this fair value gap. I then annotate the London high, which this is wrong, but I then go back and change it once I find out, oh, this is the wrong line. So London high is my draw on liquidity. That's where I want price to go for my target 1, target 2, however you want to do it. With wealth charts, because I took a huge loss last week on Friday, I'm down 900 or was down 800 in the wealth charts account, the Apex account. I've been scalping pretty much just $100 trades, $100 trades, $100 trades. That's it. So what you'll see here is the entry retrace into the order block. I'm like, okay, buy. And I'm like, I kind of have a little bit more confidence in this trade. So I buy the trade, put the stop loss in. Whoa, that's a huge stop loss. That's not even a 1-to-1. Yeah, it's not, because I'm just looking for a quick scalp. And I'm willing for price to disrespect, go all the way down to disrespect down here before I'm likely to get in. I draw out this order block right here. Oh, I picked the same colors. That's funny. Draw out the order block, and then after I move over to my wealth charts chart, I think. Yeah, we'll get there. So here I'm just looking at price. I'm like, okay, now I'm thinking I want to buy more. Now I'm thinking, that's how greedy I was. I was like, yo, buy more. This is solid. This is a solid setup. Because I'm looking at OB. We didn't even retrace it at 50%. I'm like, yo, buy more. Buy more now. Buy more. But I don't. And I should have. But it doesn't matter. So anyway, so then I go over to my wealth charts account. And because here I'm risking 1 to 3. I'm risking 100 to make 300. I'm looking at it as, okay, you can get into this trade now. So I see the order block on this chart is now this big black down candle here. And I'm like, okay, if we retrace into this candle, you can take the buy. Excuse me. So I see it set up, set my stop loss 100, take profit 300. And then once we're at the price, one more retracement, I then buy the down candle. When you want to go long, you want to buy the down candle. When you want to go short, you want to short the up candle. These are kind of basics for ICT. So we come down here, we get into the wick in the top 25%, get into it, but now I'm realizing, oh, this $300 purchase is higher than London high. So I'm realizing, oh, this is only just 150. So here I'm risking like a 1.5, I don't know what the math, I think it's 1.5R on the trade. So now I'm looking at different time frames, making sure, okay, does everything line up with what I want to see for the scalp? Because like I said, my overall view is that we're in a market maker buy model long term, which is going to eventually take out that high. So now price starts to move, setting the, now moving on. I'm like, okay, is there actually more to get from this trade? So now I'm getting greedy. I'm thinking, okay, is there more to get out of this trade? I'm like, yeah, well, if we take London high, maybe we'll take Asia high, and maybe we'll finish the market maker bar series right now. So here on the Trade C account, on the Lucid Flex account, I'm now like, okay, we're at plus 250. We could retrace. There's a very nice fair value gap that gets displaced through right here. And we're going towards London high. And I'm like, okay, we're at 270, whatever. Let's move it to 250. So I'm pretty much choking the trade down here. And eventually we get stopped out relatively soon here. And the good thing about this is that we didn't have really any slippage in the overall count. So here I'm still holding. I'm like, okay, are we going to go to this London high? Let's move the time frame. Let's go down to the 1 minute. Let's zoom out and find out, okay, well, how far are we? Because we're already up 50 points. We're up 52 points here. And it's like, okay, well, 50 points on a 10 is $1,000. So it's like, okay, well, how much more do you really want? And you know me, I want all of it. So we go, and there's going to be a slight retracement that ends up happening here, but I end up dragging my stop loss pretty tight, I think 125, and I move, I'm like, no, more, I'm going to choke it, move it higher, choke it, move it higher, choke it, move it higher, and then we tap exactly the perfect trade. So I'm perfectly fine with this. So we tap it right here, so now I know I was correct. I hit my target. And then we see the large retracement downwards. So I put target hit, boom, and we're done for the trade. Now, the reason why I didn't hold this longer was, one, I wanted to choke it. Choking means essentially you're dragging up your stop loss because you want to maximize profits. With Apex, there's certain rules about trailing drawdown that you can't. The highest point is where they use for your drawdown. So because of trailing drawdown rules with Apex, you kind of have to move your stop kind of with your movement, and you don't only want to take larger losses because it would use the highest price as the highest the differential for your trailing stop, and I just don't want that because it ends up reducing the total amount of drawdown that you can have in the accounts. And yes, I know there's new rules with the new Apex accounts, but I don't have the new Apex from March. I have the old school trailing drawdown. The new rules look freaking amazing. Just saying. I saw Trades by Matt do a breakdown the other day. The new rules for Apex look awesome. No trailing drawdown, no payout denials. It's like all these rules. Like you don't have to show proof of your trade. It's like just awesome. So anyways, back to this whole trade setup. So that was the overall idea for this trade. The things that kind of made me want to drag my stop loss pretty aggressively, because if you notice, this would have been on my Trade C account, $450, but I choked it out here. And let me just go over to that account. So here you have, and look at the precision. Look at this precision. It's freaking immaculate. So anyway, so we got down here into the order block, or at least tried closest to this order block high. Right here, another fair value gap with displacement, thinking that, okay, we're good to go, keep going higher. Then here, choke the stop loss, get stopped out here for 250. So lost roughly around $180, $175 by getting stopped out here and not just taking it to full TP. What would have happened if we moved our TP higher and higher and never moved our stop loss? We would have ended up getting stopped out right here. So that's the overall kind of lesson of the market, is that we should be overall bearish. Why should we be overall bearish? Because we just swept 3 equal highs here in Asia. They came lower, or whatever, New York opened yesterday, but then we kept going higher here. Boom, from right here in Asia session, creating the high. We swept pretty much all that liquidity, And now it's looking to go, so it's been going lower since 6 o'clock last night, 1800. So the overall idea is bearish, 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 bearish. And I've seen some people who took this as like a sell, which is like, yo, you guys are professionals. Because typically what I would have wanted to see if I would have got into another trade is I would have wanted to see something with displacement here. And the good thing about TradeC is that it actually gives you access to these second charts. So this would be a displacement leg, got traded out here. So I probably would have lost that trade. But I'd be looking for the swing high. How do we feel? Like, look at the 10-second chart. Like, look at this stick. Like, does that not make it very clear that this is a market maker sell model? Like, this is a huge displacement candle. Boom, retrace into it, roughly probably 50%. Retrace, another displacement candle, retrace into it here with fair value gap, changes state of delivery, no fair value gap, take the bearish order block. Anyways, all things you can say in hindsight, right? This sweep, if you got in on this or if you got it on this, you're safe because your stop loss is above here on the high. Anyways, doesn't matter because I don't really trade the 10-second chart. I look at it, well, not to say I don't, because sometimes I'd be hunting. But anyways, my overall view of the London high kind of target, the reason why I selected this as my target and Asia as my secondary target was because this first presented fair value gap could oftentimes be retraded into. And as we saw kind of where price gravitated towards in the later part of the morning, we came right back here, came lower, came right back here. Now we're moving a little bit higher. So obviously, I just want to share my executions for today. Be clear and transparent. So right now for the, how do you even take a look at this stuff for? Okay, so this is there a way to see all of them? Auto synced. Demo. No. Okay, so we're up $830 for week 1 of our Lucid trading accounts. And which, oh wow. Yo, it's actually such a nice platform. It's actually a sick platform. This TradeC is awesome. So here are two trades. Oh, I don't want to say it's 2 trades. Oh, one on each account. Yeah, it must be one on each account. Okay, whatever. So that's for there. And for our wealth charts, another 125 day. So we're at 579. So we're still in drawdown on the wealth charts account. We are at, like, look how, like, it's not, it's whatever, man. I want this. What did I even just open? Accounts. Okay, so now our drawdown is only $314 for our Apex funded account. So hopefully by the end of the week, we can kind of figure this out, get it into some positive P&L, and work towards our payout for our Apex account. We obviously still have a long way to go for our TradeC account, for getting into passing the evaluation, because to pass the evaluation, you need to have 3,000 on both accounts. So slowly working our way towards that. We're net, whatever, 415. So if we do 1,000 roughly a week, well, I guess tomorrow's Friday, but we'll start kind of being a little bit more aggressive, a little bit more, when I say aggressive, I mean confident, to hold my trades, hold my ideas, because my ideas are working out. That's the thing. My ideas are working out. I'm reading the market properly. It's just I'm not patient enough. I'm not able to withstand retracements. And the thing, especially with Lucid Flex, is that you don't have the same trailing drawdown rule. So this shouldn't feel like I shouldn't be afraid for this to hit here. Because if we look at 432 by 2, that's 860, just under 870 for the day. Done. That's much better than 250, but can't look at that. We didn't do that. And it's all things to grow. So nothing is failure. Everything is feedback, and looking to improve on my overall trading journey to add one more prop firm into the evaluation and then the payout stage. And right now with this TradeC, freaking this app, and look, no slippage today. If we just, oh, will this open it back up? No, probably not, right? Whatever, won't show, but pretty much no slippage today. Set it at 250, maybe at like 253, and it exited us at 250. So no complaints, no issues with Lucid Flex today, and that is my breakdown. So we got 250, so 500 plus 125, so we got 625 in trading today. And I would ask you, if you made 625 a day, would you be upset? Small gain, 6 by 5 is what, 30? So $3,000, that'd be $3,000 a week. Would you be upset with that? $3,000 a week by 4. 3, 6, 9, 12, $12,000 a month. Would you be upset with that? So those are all things you have to kind of keep in your mind. I know like there's a lot of gurus and traders online who go and they make 10,000, 20,000. Like I think I saw Fair Value God who, man, I used to watch all his stuff. He's like the turtle soup guy that I used to watch. Like, man, how's this guy catching all these turtle soups? And I think he actually caught this one too. This short up here, all the way down here, and made like a whole bunch of money. So anyways, you have to ask yourself, like, what is enough for you? Try not to compare yourself. I know it's difficult. There's a lot of stuff on social media. There's a lot of people out there who are showing huge gains, but 600, like I just said, $650 or $600 a day. That's $3,000 a week. That's $12,000 in a month. If you made $12,000 a month, would you be happy? Would you not be happy? Is that enough to cover all your expenses? These are all things that you have to think and understand when you're getting into trading, and understand that it's not going to be a straight direct path. I know that whatever this trade sit count might be at 100% accuracy win rate, but it's not realistic. I'm going to take some losses. I'm going to do things wrong. I'm going to make wrong reads. And it's all going to be about what feedback is that giving me and how am I going to then next overcome that. So stay in it, stay strong. I believe in you. What I suggest if you're doing the ICT concepts and you're trying to learn all of ICT stuff, I would say first start with the 2022 mentorship. And once you finish that, you're going to feel like a hero. You're going to be like, I could see everything. No, it's an illusion. You're going to have to then go into core content, go through all the stuff, take meticulous notes, get better, practice in a demo account. Remember, this is not financial advice. And once you practice in a demo account and you have consistency in your model, then you can move into kind of real funds, prop firm challenges, all that stuff. But I would kind of, if I could go back and kind of do it all again, I probably would have gone into prop firms more consistently. I would have put like a couple $100, $1,000 aside and go through prop firms, because there's something about these rules. Like, although the rules are the rules, and I'm not someone who friggin' knocks prop firms all that much, because they give you access to a lot of capital for very little amount of money for, well, I shouldn't say little amount of money, but like you can buy an Apex account for, at least the one that I bought was like $36. Then after the activation fee, whatever, with Welch it was 75 USD, which is like $100 Canadian. So it's like you can get access to a lot of capital if you have a model and scale relatively quickly, as long as you have control of your psychology, as long as you have control of your risk management, as long as you have control of your greed, your fear, and all the things that come with trading, because it's only once you discipline yourself that you're going to be successful in trading. And that discipline part is very overlooked when you could just get into the chart, press buy or press sell, and see price go up, down, up, down, up, down. And it gives you this idea of like, oh, this is easy. But I highly suggest you find a model first before you start just clicking this button down here. And once you find your model, make sure you practice it, make sure you become an expert in it, and then you refine. I still go back and study ICT stuff. Eventually, when you look at Jade and some of these, I really consider Jade kind of like one of the main guys, or even Fair Value God, whatever. When you look at some of the main guys, they don't really go back into the ICT stuff because they've refined their model close enough to what fits them, and they don't want to let ICT kind of change their mind on bias. And that's something that ICT actually promotes. He says all the time, come, get the material, then jump out the nest and fly. If you need some more, come back, but jump out the nest. And he's like, I don't want you guys clung up to me. And it's like, yeah, like that's essentially, it's You Inc. You Inc. and his Ends 4-part series is a very good introduction to what he's trying to establish for you to make your ends meet. I kind of spoke on that a little bit earlier in the video. And what's enough for you? Lock in what that number is, and then after actively work towards it. If you can make $100 a week USD, that's $400. That covers your gas and probably your cell phone bill for the month. And I know what it seems like. Oh, I don't want to make. Oh, I didn't come into trading to make only $400. It's like, gotta start somewhere. So the End series, very good also. So talked a lot about a lot of different things. Gonna pretty much close this video up just to show that today we took a 625 winning session of trading and kind of moved my stop too aggressively. So still working on that. Still working on not choking out my trades and letting them go to TP, or letting them go to where I want them to be. But like I said, obviously hindsight's 2020. We saw that I would have lost that trade because it did run back after it hit London high. And if I hadn't moved my stop higher, it would have eventually taken me out. And if I would have took 2 of the 3 contracts off at the London high, it still would have amounted to roughly the same amount of the profit that I took. So, excuse me. Whoa. Don't drink Monster Energy drinks. Don't drink these. So anyways, it would have been, so 434, 2/3 of that would have been close enough to 250. So it's not even like, oh, that should have been where you took your partials. It kind of would have added up to the same thing. So that's it for today's stream. Thanks for tuning in. As always, it's important that when you have your model, that you either are trading the important things like fair value gaps, order blocks, whatever stands out the most to you. And eventually, once you kind of have a little bit more experience, you'll be able to kind of use multiple ideas into one to execute the trade or get the entry that you want, whether it's OTE, all that other stuff. Okay. So I'll leave you guys with one thing, which is if you trade the fair value gap, you must always wait for the fair value gap. Catch you guys on the next one. Peace.
Red week, shaking hands on the mouse, chasing candles till they chase you out the house. You want revenge, market doesn't care, you're mad, clicking just to feel alive. That's how it takes everything you had. Step back from the screen, breathe slow, ask why you came here. You know you're not here to gamble on a chart, you're here to master your own heart. Wait for the fair value gap, don't tap, don't chase, don't snap. Trust in the process, trust in the map. One clean setup, that's the strap. We don't overtrade, we don't overcap. Protect that mind, protect that stack. Turn the FX on the screen like a flag. We wait for the fair value gap. Overlevered, every pip feels like a storm. Wide eyes, no sleep, calling chaos my new norm. But discipline is the edge you never see. Skip 100 trashy trades for that one that sets you free. Small risk, big patience, that's wealth. First rule, guard your mental health. Close that chart when you feel thirst. You're the asset, mark that first. For the fair value gap, don't tap, don't chase, don't snap. Trust in the process, trust in the stats. Slow grind higher, that's the path. We don't blow accounts, we don't look back. Losses just data, not an attack. Turn the F slow on the screen like a flag. We wait for the fair value gap. Every drawdown, just a chapter, not your name now. Every meltdown, just a signal, something changed. So you journal, you a cast. Turn that panic into trust. Turn that rush into a craft. Turn that fear into a laugh. Hey, for the fair value gap, don't tap, don't chase, don't snap.